I would say bad things starts to happen once you get a leverage of bigger than 10x. And that's why, because we are professional asset managers at Blink. I personally have never used a leverage of bigger than x5 x in my professional career. And I would say that on average, like professional asset managers don't go beyond x3. And that's why in Blink, we are quite conservative and I would say professional from asset management standpoint in terms of provisioning leverage.
Hey there, good people in crypto land. I'm Matt Leising. Welcome back to my podcast, Decent People. Today on the show, I've got Oleksandr Proskurin. He is a co-founder of Blink Finance, which is a decentralized multi-chain prime broker. Let me break that down for you. So where Alex comes from is a quantitative background in traditional finance where he was trading derivatives and equity products, and he was doing it by building quantitative models, basically high-speed trading. And what you do in that case, you're basically on the buy side. You're like a hedge fund, or you're managing your own money or maybe some other people's money, but you need a banking partner. It's called a prime broker. And what they do is they allow you access to the markets. They'll lend you money for trading. They'll do all sorts of services for you, of course, with a fee involved. So Alex is coming from that background into crypto and has now gone to the other side, and Blink Finance is now the decentralized prime broker that's offering leverage and other trading services to their customers. We talk about all of that and about Alex's background growing up in Ukraine, about how the war there has affected Blink's development and what life is like there for folks. He still has family and friends who haven't left. And we talk about what they're doing with Blink is offering under collateralized trading, because when you have a smart contract involved, such as in this world on a decentralized exchange trading, once you get to a certain level of collateral and you go under it, then your contract is closed out immediately. So there's not as much risk buildup in the system as in traditional finance. We talk about some of the pros and cons there and about how much leverage is safe leverage. And we talked about how this bear market to him, he's now been through a couple. And this one feels a little different because in previous bear markets, as he mentioned, there was a question of whether crypto was going to survive at all. It was an existential threat. This time, the question has become, when is this bear market going to end? So I found that interesting that he perceives that there's a shift there, that folks are not talking about the end of crypto, just the end of a bad market. So with all that being said, let's get to the conversation. I hope you enjoy it, and thanks so much for listening. Hey, Alex, how you doing?
Hey, Matt, I'm good. Thank you. How are you?
Yeah, I'm great. Really appreciate you coming on and taking the time to talk to me today. I'm excited to talk to you because you've got an interesting history kind of from the investor side of things. It looks like the buy side in quantitative trading and algorithmic based trading functions and a lot of computer heavy stuff that you were in before you got into crypto. I've always been fascinated with that kind of side of the investing world since I was a reporter at Bloomberg. Yeah, that'll be fun to get into. But first of all, I believe you're based in London.
Yeah.
How are things going there?
Yeah, it's doing great. So London is a great place to be, especially in summer. But yeah, it's all great.
And is the summer starting to peek through now? The gray is behind you?
Yeah, I would say that recently, maybe for a week, it's really getting like warmer and like the sun is shining. Like I think from now, it's just only good days are waiting for us.
Yeah, that's great. Enjoy it while it lasts. So I was hoping you could just, in your own words, tell me right off the bat what Blink Finance is about and what you guys are doing. You guys describe yourselves as a decentralized multi-chain prime broker. So maybe you could break that down for me and just tell me at a high level, like what you guys are up to at Blink.
Yeah, sure. So I would say in order to explain in a detailed manner what Blink Finance does, I would like to make some sort of like a step back and to tell what are the like ultimate goal of prime brokerage in traditional finance, right? So when I'm as a hedge fund, and like mostly what I'm searching for is some sort of counterparty which provides me with a good tailor-made custody service, reliable enough, which makes things easier, improves my operations, give me access to the market. But what's most important is it gives me a leverage for my trading operations. And some of people may ask, like, why can't you just go to some commercial bank, for example, in London, I know, like to Barclays or HSBC, and just ask for, I know, for a credit line and to do
And they would say,
trading?
"What do you want to use it for?" And you'd say, "Crypto," and they'd say, "There's the door, pal. See you later."
Yeah, yeah, absolutely. And the
Yeah,
problem is that sometimes you need leverage and you need your like credit line,
yeah,
not
and
for one.
just borrowed money. It's much more profitable to be trading on borrowed money because your returns could be so much bigger. On the other hand,
Absolutely.
it's dangerous because you can also lose a lot more.
Absolutely, yes, yes. But I would say that all in all, I would say like most of hedge fund managers, they do use leverage. It is some misconception of leverage being a bad thing. Like in professional hands of hedge fund managers and asset managers, it is some sort of essential tool, which sometimes even makes them make like 10, 15% per year, which is sounds like a decent and reasonable returns, like nothing crazy, but it is done actually through leverage. So it is some sort of a financial tool to be able to provide the target return.
That wasn't really the message that got through at Three Arrows Capital, though, was it?
Yeah,
Right?
absolutely.
How many
Like
billions and how much did they borrow? $3 or $4 billion worth of
yeah,
Bitcoin?
it was a huge one, but I think that's a perfect. So unfortunately, when people from non-finance background they hear about leverage, Three Arrows Capital, Alameda, FTX is something which comes to you which like comes to our mind, but actually leverage is actually the essential part of any financial and asset management system, which comes to your mind when you think about trading, asset management, and hedge funds.
I totally agree. And I think a lot of people don't understand the entire financial system is based on borrowed money in one form or
Absolutely.
another. Nobody has their own money. It's maybe the banks have some, but they're mostly using their depositors' money or they've got other sources of capital. But across the entire financial world, it's all borrowed money. And some of it has better risk management than others. But yeah, I didn't mean to say it's a bad thing. It's definitely all throughout finance, but it can be dangerous if in the wrong hands, like Three Arrows or FTX or MF Global, or you can point to a lot of different people in the traditional financial world that have blown up using leverage. Yeah. But I was curious because you come from this quantitative investor hedge fund background where you, like you're describing, you had to have a prime broker. And basically it's a bank. It's lending you money, it's lending you securities, it's helping you manage collateral, all sorts of things. And then what you need, and you need that in the traditional financial world. And just to be clear, like it's hard to be a prime broker in the traditional financial world because there's a lot of regulations. It's very capital intensive. It's very competitive. But then I'm interested, you went from being on the other side of the prime broker relationship in traditional finance to being the prime broker now in digital finance. So what's that been like for you?
Yeah, that's actually extremely interesting, I would say, path, because when I initially started my traditional finance world, like path in financial finance world, because I've been trading statistical arbitrage in US equities. Like everyone who trades statistical arbitrage knows why leverage is so important.
Because
So
you're only making a small amount in if you
yeah,
make it right, but if you can multiply it by 50 or 100, then the
e-
returns are better.
exactly. Because like for example, you earn on a spread between your long side, for example, plus 5% on Apple and minus 4.9% on Amazon. So your net profit is just 0.1%.
Yeah.
But if you multiply but by some like target leverage, it becomes like that's where like your profit comes from. Of course, it is driven by your risk management policies, etc. But you definitely need leverage to reach some target return of, I don't know, like 20 plus percent.
And what's that been like for you so far, being on the other side? And I guess the risk management is always important, but I think if you're actually lending to folks, like it's even more important, right?
Oh yeah, yeah, absolutely. I would say that that's interesting because that's basically how Blink Finance was initially created. Because when my co-founder Sergey and I was sitting in one of the actually English pubs, and we saw a huge potential in DeFi system, and we asked ourselves as the asset management professionals, like, what TradeFi cannot live without? what hedge funds cannot live without. It is actually prime brokerage and leverage. And the next step for us was, so basically, how can we apply our knowledge of financial markets and being on the other side of the market to create a solution in DeFi for leverage, just because we do know how leverage works. And in centralized finance, actually, a exchange has a function of prime brokerage, because when you open leverage position in like in spot or swap in Binance, Binance is actually the institution which provides you, right, a leverage position. But in DeFi, there is no such opportunity for you.
Yeah. And was when your co-founder and you were in the pub dreaming this all up, was it also, it must have been on your mind that for a long time, banks didn't want to touch this space at all. So it was very hard to get a bank to back you, when even to the point where if they found out you were trading crypto, they might shut down your account just immediately. So that's always been a huge issue. I think it's getting better, but I'm not sure how good it is now with all the blowups of last year. But was that in your mind that like it's hard to get access to capital here in this in DeFi and in the crypto world, and that's a niche that we can fill?
I actually think that, like, in recent years, DeFi and crypto, like the whole system, has shown a massive improvement in relationship with regulatory parts of the ecosystem. So we can see more and more, like, actually ex TradeFi guys who are building crypto hedge funds, who really approach this problem in a professional way. And they lean towards like regulation, transparency, like transparent legal structure, etc. So I think there is a huge potential. And like on the other side, DeFi provides a perfect technology infrastructure to make it possible. So I would say there is like a two-way, like from both sides, they lean towards transparency,
Certainty.
legal certainty,
Uh-huh.
etc.
To get here, it sounds like math and computer science is probably something that was a huge advantage for you. Am I right in that way, that you like what as a kid were you drawn to math and science and things that would eventually lead to this ability to get into quant finance and things like that?
Oh yeah, yeah, absolutely. Like since like maybe 15, 16, I definitely knew that I would like to work on the mix of finance and mathematics. So I have always been like a person who loved mathematics and all the computer science stuff since day one.
Where did you
So
grow
that's
up?
what. So I grew up in Ukraine, and as a result, actually, I have a STEM background. I had lots of math in my university, but I have been always in love with finance. So I was like actively trying to find something which combines these two disciplines. And of course, like that's a go-to decision for every person to go into algorithmic trading and quantitative finance, for everyone who has passion for both finance and mathematics.
What do you think led to your passion for finance and growing up in Ukraine?
I would say that that's interesting, because in my family, like my father has always been the one who has been a big fan on finance and investments and everything related to this area. Like I've been always like watching lots of financial like films about like hedge fund managers, asset management, some financial movies. So I would say this passion was like somehow driven by inside of my family, but my passion for math was something which like it was like a basic love from the first sight, I would say. Yeah.
And what's the culture like in Ukraine coming up? Because I know it's very much a hotbed of computer science and developers and technology in general in that part of the world. Is there a culture as you're growing up there that pushes you towards the hard sciences, math and computer science and things like that? Or what was that like for you?
Yeah, I would say that in Ukraine, if you go towards the path of mathematics, physics, computer science, you will find lots of places where you can really get like very good support, extremely good education and base in this, I would say, in this area, because like previously there is extremely good foundation for that. So everything related to mathematics and other STEM sciences has a big foundation.
And were your parents pushing you in that direction as well? Or how did what did they want you to do?
I would say that like initially when my father and I were talking about what should I do, we first initially agreed on a fact that I would like to be a lawyer. But at some point, I just came to him and said that I definitely feel that law is not my stuff. And but I have
Did
always
you
been
already
good
know
at
at that point that you were really good in math and like you had done a
yeah
lot of, yeah,
yeah.
advanced
The
classes?
thing I've always been good at maths. I love that. And he basically that the thing which he asked me like, "What do you love doing at school?" I said, "I love algebra." I did love geometry actually, but I loved algebra and everything related to that.
What is it about that algebra, like that type of math that appeals to you, do you think?
I would say that, like, within, like, geometry kind of thing, I was not that good at, like, linkage between the analytical side of the subject and a fact that you really need this kind of dimensional imagination to understand how things work together, which I was not that good at. In algebra, it is just pure analytics.
It's a lot more
Uh,
abstract, right?
yeah,
Yeah, you're
absolutely.
solving for an unknown.
Yeah, yeah, and that's why I loved algebra so much.
Yeah, that's great. And what did your father do?
So initially, my father and mother, that's basically how they met each other in the university. But it was like 90s, like everyone was trying to do something to like to feed the family, to get them into the better place. So at some point, he just started to trade. Yeah, he's been like just getting like something, buying in some markets, like any stuff, and trying to buy it with some premium on in Ukraine. So that's basically what he was doing.
Okay. So he wasn't just a fan of finance. He was doing it himself on the side to try to make money for the family.
Yeah, like he has been like entrepreneur at some point he decided to concentrate like solely on like one specific thing, which was goods for shoes, etc. But he
Okay.
told me that he had always had passion for finance himself, but he did not feel enough like confidence and I would say basis and foundation to make informed investment decisions. But he had always had passion for that, so I would say he's like quite happy that I found my place in this area.
Yeah, that brings up an interesting point. There is definitely a need, I think, to be a good trader, to have a certain emotional remove from what you're doing. You can't get too caught up in the amount of money maybe that's at stake. I don't know. I felt I would not be good at it because I don't think I have that removed. But is that something you found in yourself as you've been a trader, like in your previous careers?
Yeah, I would say that I was lucky enough to be an algorithmic trader, which is completely systematic. And that's actually a great thing also about DeFi, but that
Still makes you
smart.
nervous though, right? When you push that button, it could go all wrong, couldn't it?
Yeah, it
Like,
could go wrong, and that's actually what happens in DeFi. It also could
yeah.
go wrong with your smart contract and hacks. But on the other hand, it is completely systematic in a way that I don't know, like once you like there is a same level of complexity when you trade 10,000 USD and 1 million. There is a whole different level when you go to 1 billion because of market impact and others. But between these two things, for someone who is not from a finance world, there is a basically huge leap. But for a person from computer science and algorithmic trading domain, it is just a value of one environment variable, which is
Yeah.
equity.
It's just a bigger input.
Exactly.
Yeah. Okay. Obviously, speaking of Ukraine and your background there, how are things going with the war, and how's your family doing? And were you building Blink while that was starting to happen, build up, and then the invasion? And can you tell me about that?
Yeah, sure. So I would say so like previously I've been like working as a hedge fund manager. I was actually also trading like at some point I have pivoted into crypto,
Were
trading
you in
strategic
Kiev?
arbitrage. I was when the war started, I was not in Kiev. So I was on a vacation, which was I would say, quite fortunate to be that place. But back in the days, I have started to go quite often to London because many like, of my clients were London, and many I would say I had many things happening in London from professional standpoint for me. So when the war has started in Kiev, which is yes, it was like extremely unexpected. But when I ask myself, what are the place where you should go because it looks like it's something which would take a while. London was a go-to decision for me.
Yeah. Yeah, it's interesting you bring up the unexpected part of the war. I was talking to one of the guys, the co-founders at Scale Network. Do you know those guys? Half their team was in Ukraine.
Yeah,
He was saying they had to evacuate people, and we were talking about how it was nobody thought it was going to happen. Nobody thought it was going to happen. Then all of a sudden, it happened. Is your family still there, or have you been able to get them out, or is everything okay in that sense?
yeah, my family is still there. I would say for me, unfortunately, but for them, I would say that, like, fortunately, that like they do not live in a region which was that much affected by the war compared to others, which was actually quite surprisingly because it is not far away from places where the war thing happened, but like mostly because my family are so committed to a place, committed to like things which they have in Ukraine. They're used to that, so for them, like relocating was a definitely a no-go decision, despite the fact that I've been pushing hard on them to
Yeah.
leave and yeah, to help them to provide all the necessary stuff.
Yeah, it must be incredibly hard when you realize that if you leave, you might not be able to ever come back. You might lose everything forever. You must be in constant contact with them. What are they saying about how things are going, and what's the mood like from inside the country?
Yeah, I would say, unfortunately, those people who stay in Ukraine, they get used to that. On the one hand, they get used to that. But on the other hand, hindsight, they do admit a fact that when you feel this kind of stress every life, it becomes just part of your life. You get used to that, but it does not neglect all the negative effects on you when you don't sleep well, when you get nervous, etc. So like it is some like cumulative kind of effect. For example, like my grandfather had a birthday today, and unfortunately, like today, my native city has been bombed, and like there were like some like people who suffer from that, etc. So it unfortunately becomes just a normal thing of your day, which no one of us like outside of Ukraine faces, but it is just a regular day for those people living there.
Yeah. I hope everybody stays safe, and I hope obviously the war ends as soon as possible. I've actually been to Ukraine. I really enjoyed it. I was in Lvov and then Kiev
Yeah.
for a little while, and then we went to the exclusion zone and visited Chernobyl, which was
Okay.
something I'll never forget. That was the only thing that I think we did wrong was we were there in I think January, and
Super cold.
yeah, it was super cold.
Yeah.
Didn't see the sun hardly ever, and yeah, very gray, like we were talking about at the beginning. But
Yeah, I would say in winter, London is not that bad compared to Ukraine.
yeah, good point. It can always be worse, right?
Yeah.
Let's get back to Blink. And I would love to tell this kind of as a reporter and someone who has covered a lot of financial crises and things. This feature that you guys are advertising is for under collateralized trading with margin management. That kind of is a little bit of a red flag to me, just those words. Like, why would you want to be under collateralized? But I'm sure there's more to it than that. Can you tell me what that is, what that's about, and what you guys are hoping, I guess, why you think the market needs it, or what issue are you trying to solve there?
Yeah, absolutely. I would love to tell that. So I would say in essence, every like kind of leverage which asset manager needs to get is under collateralized in TradeFi by its nature. So when someone trades, I trade with a leverage like of X something. It in essence mean under collateralized. You have 1 million of assets under management, get a credit of 1 million more, and you trade on that.
Yeah,
Because and that's what under collateralized is.
that's a good
It
point. And like in the futures world, like the Chicago Mercantile Exchange, I think margin is usually around 7% of the
yeah,
over underlying value of whatever you're trading. So like, that's not fully collateralized, not even close.
exactly. And I would say bad things starts to happen once you get a leverage of bigger than 10x. And that's why because we are professional asset managers at Blink. I personally have never used a leverage of bigger than x5 x in my professional career. And I would say that on average, like professional asset managers don't go beyond x3. And that's why in Blink we are quite conservative and I would say professional from asset management standpoint in terms of provisioning leverage. So we do not provide a leverage higher than X5. We take some portion of this negative sentiment from a word under collateralized because we don't really think that a professional asset manager would ever come to you to ask for something more than that, at least at this stage.
It's interesting to think also in that context where a lot of the credit lending, the crypto credit lending firms that kind of blew up last year, it was usually over collateralized, right? If you gave them $100 in Bitcoin, they might give you $50 or $70 back in fiat or in dollar coin, right?
Yeah.
Have you been able to take the traditional finance risk management kind of framework that you were using and just bring it into to DeFi? Or what's that been like?
Yeah, absolutely. So I would say there are two ways to approach the problem. So the first one is what the problem is DeFi was for under collateralized like leverage. So like previously there were several protocols which provided traders with not just under collateralized leverage, but basically with uncollateralized leverage. For example, Alameda comes to you know that it's a big hedge fund and asks for 100 mil of credit line. And what you do, you sign contracts with them, just give them the leverage, and that's it. But at some point, Alameda just blows up, and you find out that you're gonna get your money
They're
back.
not putting up anything in that
Yeah,
situation as collateral, really?
yeah, absolutely. But secondly, what we have understood that if, for example, someone would be able to track the positions of Alameda in real time and liquidate their position and take back the collateral once things go wrong. Like you could have landed to Alameda, but as long as you do know that if something goes wrong, you take the control over the assets of Alameda, sell everything just to get your initial credit back, and it is what it is, that will be absolutely fine. And that's what we have employed in Blink. So there are two parts of the system. So the first one is a risk management system which is basically margin engine, which takes control of traders' portfolio. So when trader like takes leverage from Blink, we do analyze in real time their portfolio to see if things go wrong or not, which we also take a look at traditional finance, how this problem is solved there, and we use CME span margin model, but we just modified it onto like DeFi principles. And there is a smart contract, which is Blink protocol, which basically orchestrates and regulates the whole process such that when liquidation comes into action, like it gets control over traders' funds, liquidates them, gives money back to a credit, like to the person who provided the borrow funds, and yeah, gives money back to what is left to a
Yeah.
trader.
Yeah, I love that. And I love the way that smart contracts can work here. And so and there's so much more transparency and visibility that compared to the traditional financial world. That's why risk has been allowed to build up sometimes, right? And it's building and building. And then it blows up and takes down a bunch of different institutions, like in the financial crisis or in other smaller crises. And so basically what you're saying is in this digital world, in the smart contract based process that you guys have, it's like there's a constant mark to market, right? So you always know what your customer's P&L is. And I guess what you're saying is if, yeah, in the agreement, I said, yeah, I'll loan you 100 million or whatever. But if your portfolio drops to X value, then I'm gonna liquidate you instantly. And that's all done. There's no haggling about that because the smart contract is programmed to if it hits this level, then you're selling everything and you're returning money back to people. That's basically it, right?
Yeah, absolutely.
Yeah, that's very cool. But what there's always a stress though, right? There's always a black swan. What do you worry about in that situation? What could come out of left field to screw that up?
Oh yeah, there are so many things which can go in DeFi in the wrong way. So first of all, that like you need to really understand when to liquidate a user. So what should be this point X that when you should liquidate a user? And for example, I give you 10x leverage. So basically, and you ask yourself, so when I will be liquidated? So some naive answer, which would be when my portfolio drops by 10%, because 10 by 10 is 100%, and that's it. But unfortunately, you would see that you would never be liquidated if you take 10x leverage when your portfolio drops by 10%, but you will be liquidated much earlier. And why so is because of slippage. because usually things go wrong and liquidations go wrong, not in a non-volatile, but rather in extremely volatile environment when everyone wants to sell. And you and your liquidation engine would also be part of the system trying to sell, which causes huge markets, like it causes slippage, which
Right.
basically means
Yeah.
that, yeah,
So you might want to sell at 90, let's say, but you
yeah,
can't get 90 and you end up getting 70. So now you're
exactly.
you're screwed. Even you're three times higher losses than you wanted. But it's like the market is going straight down at that point, right? There's no buyers. And so yeah, it's a great point that if everyone's selling, it's a terrible time to sell.
Exactly. So like you try to sell, and like the second thing is the cost of this liquidation, because in DeFi, like in DeFi, like specifically in Ethereum network, you have the cost of operation, which is gas, right? So
Yeah.
there's a
Right.
basis to that. So and unfortunately, during liquidation, like everyone wants to sell, so that's why your gas cost just skyrockets, right? So you also need to take that into account.
So are you able to manage that in a smart contract so that you don't end up just triggering it to sell in a terrible down market?
So what we do is that we impose several, I would say, so we start liquidating a user earlier than this 10% in example when they get like 10x leverage. So we have some sort of precaution settings to liquidate a user. So unfortunately, a user will be liquidated earlier than that. And yes, we do track current gas costs. So basically what we do that for each user, we calculate the implied cost of liquidation, like in terms of gas, if a user would be liquidated right here, right now, just because it will be on us, and it is taken into account to calculate the liquidation point.
Okay. So any huge shock to the system is always going to be a tough thing to manage. I'm thinking of like when who it was Silvergate was going down, I think it was, or
Yeah,
no, it was Silicon Valley Bank
yeah,
teetering, and US dollar coin, it came out, it had some reserves there, and they
yeah.
they ended up breaking the peg, but they came back. But there's always crazy stuff like that, right? That's out there, those black swan kind of things.
Yeah, that's actually a huge thing, and what we have done is also what we call, not what we call, but that's actually the concept, which is called design partners. So we basically started to partner up with professional DeFi hedge fund managers, which like almost all of them are ex-traditional finance, like
Traders, brokers,
highly
whatever.
valuable pedigree traders, like guys who know this stuff. But they operate in DeFi, who actually have seen this, like all of these things, and what we did when we were like constructing this liquidation engine, we were doing it with them to battle test it with them, to hear what they say about the architecture, say what things can go wrong. And actually the case which you have told, like one of like our design partners was with a hedge fund, with a DeFi fund, who was really experienced the thing. And the good thing that they managed to overcome this in a very good manner, just because they were well prepared for this kind of black swan events.
It's always been really, I think, interesting to me that a lot of traders have come into crypto because a lot of the traditional financial markets are pretty boring these days, to be honest. There's not a lot of volatility, there's not a lot of spread. Like in the US equities market compared to today, to the 70s, it's a whole different world where the spreads were huge and you could make money just by buying and selling stocks on the stock market. But so I think that the volatility in crypto is something that they love. I think it's still Wild West, not as many rules as in other markets for sure. And then and it's like I think currencies was maybe like the last market that seemed to be like fun, or like you could
Yeah.
make good money there. Is that what have you found that with your customers and your own experience? Like all of a sudden there's this new asset class and it's like trading can be wild and crazy again.
Yeah, I would say that as a professional hedge fund manager and asset manager, you try to find markets where you can get the most of edge. I would say still like markets like commodities are crazy, right? And we have seen that in 2022. Crazy things which were happening there. So volatility, and I would say the proportion of professional hedge fund managers to non-professional is something which is very important factor which drives your Sharpe ratio and your performance. And currently, crypto is very, and not currently actually, but crypto is like a very favorable place to be there because you can really see some extremely smart people from TradeFi. But on the other hand, we can really see a big retail flow, and it is a like the best condition for algorithmic trader
Yeah.
to profit from.
I won't make you say it, but that's another word for that retail flow is the dumb money, right?
Yeah, 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 the retail flow is a good way to, yeah, to, yeah, to call this, but
Yeah, it's a brutal world. That's no, that's why places like Citadel and other big shops pay so much money for order flow in the stock market.
oh yeah,
They need to know that there is kind, benevolent trading coming in against them and not some shark with like 40,000 terabytes of compute behind what they're doing.
exactly. So the informed flow is something which every market maker is afraid of.
And just for listeners, that's because once they get a sense of what you're doing, their tactics will change in a heartbeat, and you'll get like completely rugged. Basically, is to use a crypto term in the traditional financial world. They'll just bait and switch you, but the retail flow won't ever do that. It's just there to buy or to sell.
Yeah, yeah, absolutely. And I would say and the volatility due to Wild West is huge in crypto by its nature. But honestly, for me, you could have seen the same thing happening in traditional finance, but many years ago. Like I would say the history kind of repeats itself in its manner.
Yeah, I agree with that, but it's also so much easier to get into crypto as just anybody. Like
Yeah,
in traditional finance, if you really want to be doing something with a lot of money, it's very hard. Like it's not an open system.
absolutely. I would say like the way it's democratic and easy to
Yeah,
access is
yeah.
what makes crypto different.
So what are you hearing from all those customers you have now, the sophisticated folks? Is there a consensus on where the market is right now? Have we hit the bottom and we're on our way up, or what do you think the vibe is at this time?
I would say that like we have seen several bear markets of crypto, right? And I would say that if previously, like in previous bear markets, like the question was whether crypto will continue to live or not. In this
Yeah,
bear
it's
market,
existential, right?
yeah. In this condition we hear the question when the bear market ends. So it's no longer a question of whether crypto will live or not, but it's rather a question when we'll go back to some good bull run times.
Yeah, that's a good point. I hadn't quite thought of it in that term, but I think that conversation about, yeah, is this it for crypto is no longer really valid. I don't know if it ever was, to be honest, but a lot of people wanted it to be. Okay, so yeah, that's one difference, and that's a qualitative difference. But what do you think, or what's your gut for where things stand with maybe the ending of the bear market and a more bullish kind of reemergence?
It's a tough thing for me, I would say, to predict because surprisingly, I would call myself not a bait algorithmic trader, but as a discretionary trader for someone who just times market. I'm the worst person to listen to. I've been buying Bitcoin in 2017 when it was 17. So the next day Bitcoin started to fall. So that's the kind of person you talk to.
Okay.
But I would say that probably I don't know why. Like that's what my gut feeling says. But yeah, take into account what I have just said. You should listen to me.
Yeah. All right.
But
So you're
probably
gonna
end of
stick
this
to the
year.
yeah.
Yeah, I would say probably like end of this year, starting next year. I would say we should see some like reversal of the trend because right now we don't actually see that much of things happening. Like volumes have shrunk. We don't really see some big things coming in. Everyone's just waiting for some new information to come into the market. So it's actually the best time to build.
Yeah. So you're gonna stick to statistical arbitrage and not try to time the market. I get that. And then, but speaking of that, that's perfectly leads into my next question was, are you getting any sense or have you seen projects that are very exciting and that might be able to pull things out of the bear market, like DeFi Summer, all these lending protocols and collateralized DeFi systems started coming out, and that's what ended the bull market, or sorry, the bear market that had started in mid early 2018 or so. So are you getting any inklings of stuff like that, or anything that's cool that you've seen in the startup kind of phase that would maybe be a catalyst like that?
Yeah, I would say overall, like the whole system works. There is some sort of external signal for the whole market that the crypto should go up. But before that, like there are so many different startups and companies who build the whole infrastructure and ecosystem just waiting for this one signal. So I don't really believe that it should happen like some startup would create something extraordinary, which would drive crypto crazy, but rather there are so many different projects which create some like innovative in a very like many things products which are even like completely change the way people approach trading in traditional finance. For example, options trading. There are like several projects which I think make completely change the approach to that. But they just waiting for this some external signal, which I think is mainly regulatory, which would just say, okay, guys, now big liquidity institutions and other like counterparties can just inject a whole bunch of liquidity into the system.
Yeah.
And
Or like all of
like,
a sudden there's regulatory clarity and they know what the
yeah,
rules are, so that the people on the sidelines that have a shit ton of money can get into this if they want to.
yeah, and they really get the tools. Like they can really see that the system is ready to acquire that and ready to provide people with a wide variety of different tools
Yeah.
for professional asset management.
Yeah, the thing that worries me is that I think the public interest in crypto has been damaged so badly over two bull and bear cycles. I don't see. I feel like a lot of people just feel like, oh, it's a scam, or I got burned too many times and I'm not coming back in. But you make a good point that if the institutional crowd, which for the most part has stayed on the sidelines, for many reasons they haven't felt that it was safe enough for them to get involved because of the lack of clarity. But if that clarity was there, I think, and certainly with prices where they are compared to all-time highs, like I think that would be a very big buy signal for them. But the other bummer, and I'm sorry to be a bummer, but I don't see that. I think it's going the opposite way in the U.S. right now. Like the
Yeah.
current regulatory regime is not friendly, and I don't think they want to give that sort of okay sign right at the moment.
Yeah, yeah, I would say, and unfortunately, what I would say that biggest crypto institutions, like for example, Coinbase in US, what I feel that they're extremely open to a conversation because Coinbase is a like a publicly traded company. And I would say since day one, they have shown that, hey guys, we like we want to speak to a regulator. Just tell us what to do and not and what not to do, and we're willing to do this kind of stuff. So we're open to this dialogue. But unfortunately, I would say there is like the attitude is quite harsh on them, and it looks even worse taking into account that they were the one who have been always open like to a good conversation, which is yeah, which is quite disappointing.
Yeah, it points at a pretty big flaw in the regulatory scheme where it's always after the fact. Like regulators come after you've done something wrong. And I guess in more developed markets, you should know you shouldn't be front running. You shouldn't be doing certain things like spoofing or whatever. But there are gray areas too. And I think, especially in crypto, when they haven't laid out the rules and people don't have anything to fall back on, that's where it gets very frustrating, is because, like you said, people want to do the right thing, but if they don't have the tools to do it, it's not going to happen. Alex, this has been really interesting. I'm really glad we got together. I've learned a lot, and I really appreciate you talking to me about Blink. And one silly question: have you launched yet, or where are you in that journey?
Yeah, we are aiming to launch like our closed beta testnet in October this year. We aim to create the first mainnet transaction for bilateral like leverage and collateral provision with one of our clients in mainnet in August this year. And so we're actively building, and the mainnet, like the big release, is aimed for 2024, for January 2024. So that's
Okay.
why I really look forward to bull market coming up next year.
Yep. Yeah, we do too at Decential as a media company. It definitely helps. Good luck with that. And thanks again for talking to me. And then tell people how they can find out more about Blink and more about you.
Yeah, sure. So I would say, like at Blink, we generate lots of content to educate our users. So I would say that the best reference point is, of course, our website, which is Blink Finance XYZ. And I would say basically it has all of the media. I like regularly post, like on my Twitter account, some updates, which is Proskurin Alex. And yeah, I would say like our Medium account and our Twitter account, which is Blink Finance, on Twitter, are the best places to stay in touch with us and to see what's going on, and yeah, to see all the updates.
Okay. Great. Yeah, once again, thanks, man. I really appreciate the conversation. It was very interesting.
Yeah, thank you very much, Matt.
That's it for this episode. Thanks for joining us, and don't forget to rate and follow this show on Apple, Spotify, and Amazon Music. Decent People is a production of Decential Media. It is produced by Matt Bogart, with music by Brian Duncan and Kareem Imes.